Welcome to the Foundry, where leaders are forged daily. I'm your host, George Roberts. Welcome back, entrepreneurs. Today we have Cody Laughlin and Brian Alfaro, founders of Blue Oak Capital. In addition, Brian is founder of Blockhouse Coffee in Houston. Welcome, Cody and Brian.
Thank you for having us, George. Good morning.
Good morning, George. Thanks for having us.
Good morning. I guess I'd like to start out by asking you, tell me the origin story of Blue Oak Capital.
Well, that story started through networking and just, other ventures here in the commercial real estate space that led connections between myself and then John Beatty, who's our third partner. And, we started collaborating on opportunities together, looking at deals, doing property tours, and just definitely solidifying the synergies and alignment of interest. And so we officially launched Blue Oak Capital first part of 2020. And then John and Brian met through a networking event. And Brian, I'll let you take it from there and just tell that part of the story.
Yeah, I appreciate it, Cody. I met our third partner, John Beatty, at a networking event. We were at a multifamily real estate investing boot camp, which was at the time being held online virtually because of COVID was just about getting started, if I'm not mistaken. And, I was in the Zoom chat just saying, hey, guys, my name's Brian. I'm here. I'm in Houston. Love to talk to anybody else in Texas. And John was in there too. And he lives not too far from me. And we're all in Houston in the different parts of the suburbs. So connected with him online, had some phone calls, some Zoom meetings, things like that. And he coincidentally was in a mentorship group that I was actually already looking at. It just ended up being pure coincidence. And as I dug a little bit deeper in that group, I decided to end up joining, kept the relationship going with John, eventually met Cody, and they just partnered up and just started forming Blue Oak Capital and just kept the conversation going and networking and figuring out, I was trying to figure out what their biggest need was. And then was I the right person for them and the right person to bring that value add to their business? And it ended up being a mutual alignment of interest where we had the same short-term and long-term goals. So we all decided instead of fighting against each other for probably the same deals, let's work together. Let's partner up and see if we can do some bigger and better things. And here we are today.
I love it. Those networking events can be very powerful. I know that my group, Horizon Multifamily, we started out at the Dealmaker Live event. You guys going to any events this year?
We did just miss the latest Dealmaker. It was here in Texas. It was in Dallas. Just too many things on the calendar. I know we've got some other stuff planned. Cody, I'm pretty sure we'll be at the Old Capital Conference, which is in September, if I'm not mistaken, in Arlington. Mm-hmm. MM4, which is a Jake and Gino event, which is our mentorship group, coincidentally, is in October. And I'm sure we'll find at least one other, maybe smaller, mid-sized one to try to knock out.
That's great because Orlando, that's our stomping ground. So we'll see you, Brian and Cody, and look forward to meeting John.
Yeah, that'd be fun.
So why don't we back up a little bit? Most people don't start out in multifamily. What were you guys doing before you entered the multifamily? Were you doing the traditional thing of single family fix and flips or landlording?
Yeah, absolutely. I know I started back in 2010 in single family, started out with a long-term hold, a rental, and then along the way started pursuing some other non-real estate related business ventures that kind of took me away from real estate for a couple of years, and then got re-engaged with real estate several years ago and started back with single family flips. Did several flips, tried doing some wholesale for about a half a minute and, realized that, man, this is just not the scalable model that I was hoping for. And so made that transition to multifamily back in 2019. So.
Great.
Yeah. And for me, I was very similar to Cody. I did start in the single family space. Started doing that in 2018, but very quickly realized, just like Cody, that it wasn't the right fit for my personality. I think, real estate investing is such a broad asset class. There's so many things you can do in real estate investing. Sometimes it doesn't even have anything to necessarily do with the buildings, right? You could be buying notes. You could be a private lender. There's so many different avenues. So when I got into it, I didn't know what I didn't know. And I was thinking very small, I would say. And sort of I had a lot of limiting beliefs. So I just started in the single family side because it was the most accessible. There was the most education, free education online, between YouTube and Bigger Pockets and a bunch of other free resources that are all over the internet. It was just something that was easy to get your foot in. So did that for about 18 months, give or take, before quickly realizing that it was a ton of work. The same, almost arguably, I would argue the same amount of work as being in commercial multifamily, but it doesn't have the same scalability, in my opinion, or it takes longer to scale. So in order to accomplish my goals, what I have personally, I decided it was best to pursue something bigger and better. And that's when I stepped into the commercial real estate space, started looking hard at multifamily. And then to go back to what we were talking about, met John, met Cody, and now we're looking exclusively at multifamily deals, trying to not get shiny object syndrome.
Right. Well, okay. You ended with not getting a shiny object syndrome, but I did want to ask you or follow on that idea of there being other options. So you are also running Blockhouse Coffee. So maybe you can tell us a little bit about that.
Yeah, for sure. So Blockhouse started in 2017. It's another business venture with a different partner of mine. His name is actually Cody. So it's really funny when I'm talking to my wife and I'm like, "Hey, Cody." She's like, "Which one?" So really funny.
The cool one.
Yeah, that's right. That's right. And they're both from Louisiana. So, just coincidence. So, yeah, that started in 2017, but I had been working with the other Cody, not the one on our podcast, since 2007. So we were working at another restaurant concept. I had been working there since I was 16 in high school. He had promoted me to a manager position so that I could not only make more money, but learn more about business and, take advantage of things like tuition reimbursement or whatever. And we worked together from daily, pretty much from 2007 to 2019 when he sold that concept. So it was about 12 years. But in between 2017 and 2019, we had started Blockhouse Coffee. So for about 2 years, I was managing both concepts. That other concept that we had worked together on for about a decade, Blockhouse Coffee. And then at the same time, in 2018 is when I started getting into real estate. So I was kind of juggling quite a bit of things, but it doesn't kill you, only makes you stronger, right? But so we started that in 2017, and the goal with that was to have our own brand, our own business. The other thing that we were operating was a franchise, and not that was bad in any way, but we wanted to challenge ourselves and see, could we create something from scratch that people really liked and enjoyed, and also something that fit with our personality type and the product and all that stuff. So I started that in 2017, and it was just a proof of concept. Let it grow for a few years, and then started getting into figuring out, like, how do we want to grow this? How do we want to scale this to a point where it's, we don't want to have like 1,000 locations or anything, but want it to be a good sized company where we can take care of our customers, take care of our staff, and then obviously have some benefit on our end as well.
That's awesome. So then to pivot back to Blue Oak Capital, tell me about the size of the company, maybe in terms of units or assets under management.
Yeah, so we recently in Q2 of this year closed on a 240 unit co-GP opportunity in North Houston. So that is our first exposure on the active side. And then collectively we're passive investors in, another 2,000 doors or so, most of which is John's investment portfolio. But yeah, so to date, there's 240 units and looking to expand that. We had a pretty big goal this year to add $20 to $30 million of assets under management into our own portfolio. But as most people know right now, it's a very, very competitive landscape, and we've seen a tremendous appreciation in valuations across at least the markets we're in. So we're finding it quite difficult to find deals like probably everybody else, but that's okay. We're staying busy. So
tell us about your acquisitions criteria.
So we're predominantly looking in the core plus space, right? So we like more of the stabilized operating cash flow play with maybe just a light value add component. Typically looking for, I wouldn't call them newer buildings per se, but we're definitely looking or targeting buildings that are 1980s vintage or newer. We don't really like the older 60s, early 70s product. I just think it comes with too much deferred maintenance or CapEx costs. That could be very labor intensive. So we're typically looking for that, again, BEC space, workforce housing space. We really like, call it 70 to 250 units is what we've been really targeting in really strategic locations. So we're all across Central Texas, Tennessee, and Kansas City, Missouri, and Kansas. And yeah.
Exciting. So you actually cast a pretty wide net. Those are some great places. I know Tennessee, #1 in terms of in-migration rate now, just leapt to the top of the list, beating out Texas and Florida. So surprised a few people. Tennessee's amazing. Yeah, looking at Tennessee myself. We've got a partner from Tennessee. So do you think those acquisitions criteria might change? Are you looking to do maybe some heavier value add in the future, or is this basically your MO going forward?
That's a great question. And I know these conversations have come up more frequently internally between Brian and John and I, because again, it's a very, very competitive landscape. And at least what we've observed is, bigger players, bigger institutional level buyers that are coming into a space or markets that they normally wouldn't be interested in. Right. And I think everybody's having the same challenge of finding deals right now. And so we pride ourselves on being very disciplined and very focused. So I think that our criteria may flex just a little bit, but not audaciously. So, prior to just a couple of months ago, we would probably say we're looking closer to 70 to 200 units at $10 and $20 million buy box. We've recently expanded that to, more of the 250 range or so unit count, and then, up to maybe a $30 million buy box. Just to give ourselves a little bit more room, hopefully find a little less competition in some of the bigger opportunities. But I think overall, the investing thesis will always remain the same.
Great, that's awesome. And then you're touching on, increase the size of the buy box. Obviously, capital raising's got to expand with that too. Have you got any tips for aspiring capital raisers?
It's perfect timing, man. We just actually released a podcast episode for us yesterday talking about kind of our 6-step framework that worked really well for us and our capital raise. But, it all starts with relationship building, #1, right, Brian? I mean, you have to constantly be networking, constantly be engaging your database, interacting with your database, telling them what you're doing, and staying active. Would you agree, Brian?
100%. Yeah, I think the important thing for anybody looking to get into deals and to be a source of equity is just to understand you have to have a brand, whether that's a company brand, like we have Blue Oak Capital, obviously, but some people are also very successful at attracting capital with their own personal brand. They're just known in the industry as being the guy or the gal that's, very successful in multifamily real estate or whatever asset class you're in. So I would say creating a brand and being present online and in person so that you can do what Cody just said, and that's build those relationships, right? You want to make sure you're nurturing all the conversations you're having with people, even if they're not investors, passive investors, whether they're vendors, property managers, brokers, whatever the case may be. Just want to make sure you're building strong relationships and laying that foundation so that when it is finally time, whether it's 6 months, a year, you find your next project, everybody's ready to go. You don't want to be having conversations with people when you're scrambling, right? You don't want to be scrambling to raise capital. So that's never a good situation to be in. You want to have everybody ready to go.
Yep. The worst time to raise capital is when you need it.
That's right.
Right. And same thing with building relationships, which is why you do it all the time. And part of that building of relationships is your online presence and your platform. So maybe you can tell us a little bit about your podcast.
Yeah, so we started the podcast in early 2020, and to date, we've just released episode number 77, I think, is the one we released. And the podcast has been a very powerful medium for us for multiple different levels. #1, networking with other industry professionals and leaders, building relationships with people that are doing some extraordinary things in the space and some that you would consider influencers in the space. So having that resourcefulness and access to, high level individuals in the space is important. #2, we're providing value to our database and to our network through education, right? Giving out content that people can apply to their business and pick up some nuggets that could hopefully help change the trajectory of their business. And #3, I think it establishes credibility, right? And I think this was something that was very, very beneficial for us during our capital raise, for example, when we were networking with, maybe newer investors that were just getting into syndication or had some questions about syndication, we were able to refer them to our resources through the podcast, blogs, things like that, that would answer those questions. And I think it just solidified the credibility, with those investors, and actually converted several of them to invest with us. So the podcast has been a great medium. And if you think about it, I mean, I forget the statistic, but the podcast medium has grown by several billion downloads over the past couple of years. And we're a very mobile society. Most people are either traveling or in their vehicles, or we're always constantly moving, right? Except for COVID, got us all stationary. But point being is, podcast is a very easy medium for most people to tune into and plug into, because you can just download an app, plug it into your phone, listen to it in the car, at the gym, while you're running. So we found it to be a very, very impactful medium for education that people tune into quite a bit. So.
And that podcast, by the way, is the Prosperity Through Multifamily Real Estate Investing podcast.
Yes, it is. Yeah, thank you. Yeah, we're streaming on.
Appreciate that shout.
Yeah, we're streaming on Spotify, Google Podcasts, Apple Podcasts, and Stitcher. So
awesome, great platforms. And so we spoke a lot about syndication, and that's exciting. That's definitely my interest, and that's where I'm at. But I imagine there are a lot of listeners who might be at the point where, hey, they're doing fix and flips. They heard about the economies of scale of multifamily, and they might wonder, how to go about it. So, I mean, you guys got together through going to Dealmaker Live. You went to a conference. But what would you say might be the first step for somebody who's just out there? I don't know what to do. I've been learning about this multifamily, but I don't really know where to put my first foot down. What would you recommend?
I would definitely say, number one, never stop educating yourself. I mean, education, there's always something to learn in this space, no matter how experienced you are. So I definitely think never stop learning, always continue to network, be as visible in networking events, like Brian was saying, whether it be online or in person. You can never stop growing your database of resources that you can turn to, whether that be to partner with or learn from, whatever the case may be. But you always have to continue to be networking. And then ultimately, it's just about taking action. You're going to make mistakes. You're going to mess up. You're going to drop the ball here to there. But it's just about taking action and just, learning through experiences, which is, to me, is some of the best learning opportunities that you can do. So,
yeah, I'm going to echo that same sentiment, George. I think it's Josh in our group. He always posts things about education times action equals results, right? It's a little formula. So I'm going to echo the same sentiment that if you're educating yourself through various means, right? Reading books, watching YouTube videos, attending, there's tons of virtual meetups. You could probably go to 2 meetups a day, 5 days a week on Zoom if you wanted to, if you know where to look, being active and networking. In the multifamily industry, you find it's actually a pretty small space, even though it's a very large space, which sounds kind of funny, but everybody knows each other, and it's really easy to find the active people that are very educated and influencers in the industry. So, go out there and really just network. That's, I think, if I had to pick one thing, if you said, what's the one thing that I can do to take my business from, single family flips or wholesaling or buying rentals or whatever into commercial real estate, whether it's multifamily or retail or whatever, is you need to be networking with people that are where you want to be. So if you want to own 1,000 units, it's nice to talk to the guy who has none and dream together sometimes, but it's even better for you to talk to somebody who has 1,000 units or 5,000 units, or, we've had a guy on our podcast that has 20,000 units, right? Which is just an insane number when you say it out loud. So when you're not talking to these people and sort of, getting knowledge and education and experience from them, you're going to find it really hard to really change your mindset, which is really what this is all about. It's about thinking bigger, right? We talk to a lot of new people that are, they're interested in going into multifamily, and they're used to the single family flips, and they think that they're going to go, not that this is a bad thing, but they're thinking like, I'm going to buy a 5 unit because that's commercial. It's only one more door above the 4 unit residential, right? And I always encourage people to think bigger, right? It's not about going to that 5 doors or 10 doors. Like, why not 100 doors? Why can't you do that? It's the same amount of work. You just got to build the team to make it happen. And it's not about, well, I can't put 20% down on a $10 million property or whatever. and that's okay. You can find people that can help you, cross that finish line, because multifamily ultimately is a team sport, and it's all about how strong your team is. So it goes back to that networking. Go out there, network, build your team, get educated, and it's going to take some time, have some patience, but good things will happen.
So I love it. Networking is certainly top on my list, and I gather that I believe we appear to all be the sort of natural networkers, but for some people that doesn't really come like second nature. So do you have any tips for somebody who might want to maybe approach someone that's sort of maybe one step above them, and they want to kind of reach up and build that team that's going to get them there? What would you say is the best way to approach that potential team member?
Yeah, I think it's important that you identify what that skill set is or what that comfort level is for you up front, right? Before you go out there and put yourself out there, you really need to figure out who you are as an entrepreneur, as an investor, as a business owner, and then leverage that particular skill set or that value add, so to speak, in your networking, right? So if you're not the natural networker and, but maybe you're very analytical and maybe you're good at underwriting and financial analysis, you can take that then and have a conversation starter now with other people in conversation. Say, look, here's my value add. Here's where I can fit amongst a team or partnership. I don't really feel comfortable being in a big room of people, but here's where I can be the most value. And ultimately there's going to be some level of networking that you have to do in this space, right? And look, we talked about this a minute ago, you can do it virtually, right? I mean, social media is a great platform people use to connect. Online is great ways. You don't have to always be physically in a room of people standing in the spotlight, so to speak, but there's subtle ways that you can continue to network, even though that's something you're not comfortable doing. But I think it starts with identifying who you are as an investor, as a business owner, and then make that your pitch when you're networking and get very specific into those details. So that way you can find people that complement, your skill set.
Agreed.
Awesome. And I know one of the things that you guys are great at doing is helping people who are interested in passively investing. So if you're on the other side, you're not maybe ready to go into active. How do you get involved if you just want to be passive?
Involved with us or involved just in general?
In general, but you know what? I think that's a great lead in.
No, I think to echo kind of what we've just been discussing already, even as a passive investor, definitely having that brand presence and telling, your community and your network as what your interest is and who you are as an investor. If you're an LP and that's all you want to do, people need to know that, right? And so you want to get in front of as many operators and syndicators as you can, and find those particular partners or operators that have the same alignment of interest that you do, the same investing thesis, or getting opportunities that you're most interested in investing in, and build relationships with them, get on their distribution list, see what they're doing, watch the activity that they have going on in their business. And then eventually, it's just finding the right opportunity that you feel is a great fit and taking action. So what do you think, Brian?
Yeah, same thing. It's going to be the same steps. You got to be educated. Do not be, a gambler when it comes to passive investing. This is not casino gambling, right? You still need to be educated on what's a good deal, what's a bad deal, based on your personal, I would say, risk tolerance and your investing thesis, right? Some operator or some people have a higher risk tolerance. They want the things that are, heavy lifts is what we call them in our industry, right? $20,000-$30,000 in renovation per door. Some people like that because the returns are more attractive and they're okay putting more risk, putting more money into a riskier deal. And then some people are the other way around. They're maybe at the end of their career and they're looking for some steady cash flow to live on while they retire, or just some appreciation of their own personal capital. And they want something a little bit more steady. They want just a steady yield play. It's going to give them just 5, 6, 7% cash on cash and just low mid-teens on IRR, B class or even A class asset. So get educated about each type of investment strategy, each type of asset class, what to look for. And we do have some, for a shameless plug, we do have some tools on our website that can kind of help guide you on passive investing, what to look for. If you're evaluating a deal, but you do want to be educated. And then the second thing Cody mentioned, I agree 100%, is you're really giving your money to somebody based on the relationship you have. You're not going to meet somebody today and then wire them $50,000 or $75,000 tomorrow. Very unlikely. You really want to know and trust the operator. So follow them as best you can. Add them on Facebook, add them on LinkedIn, listen to their podcast, watch them on YouTube, do all the little things to make sure that you align with them as people first, and then you align with their investing thesis. And then the deal is sort of the third part. A lot of people think it's just the deal I'm looking at. And I think that's where they ultimately make the mistake. You're investing in the people, not in the deal necessarily.
That's great. And I think a lot of people make the assumption, particularly if they're interested in being active investors, that, oh yeah, being a limited partner is easy, and it isn't. It's just like any other investment. Even if you're in individual equities, right? You got to be reading those financial statements, the financial press, understand how the company makes their business, how do they differentiate themselves in their market. So you heard the gentleman. Go out to www.blueoakinvest.com and you can find some of those tools. So then it really isn't easy. There is a lot that goes along with being a limited partner, a lot of work to do. And so what would you say are some of the pitfalls? How do you avoid them?
Well, I think, Brian, you just alluded to earlier. I think the biggest mistake is people get into opportunities with not being very educated or not having good relationships or understanding on who's operating the deal. And they just jump into the first opportunity that they come across because they're excited. And they ultimately become a very frustrated investor because they don't know what they don't know, right? Or maybe they, gotten with an operator that unfortunately just may have not been the right fit for them. And so, to avoid some of the pitfalls, again, take your time, be patient, be disciplined, be a very active passive investor. And what we mean by that is, again, always be learning, always be educating yourself. Ask questions, vet your sponsorships teams, which we talk about all the time, right? Get to know who it is that you're investing with. And then once you do get to the point of ready to commit, make sure that you're reading those legal documents, make sure that you're reading those PPM documents, make sure that you understand the exact structure of the deal, the compensation structure, waterfalls, things like that. You want to understand this deal top to bottom before you go place your hard-earned capital into these deals. So the biggest pitfalls to avoid, again, just being patient, I think, is the biggest thing, and getting educated.
Awesome. And at this point, I'd like to take our final pivot and give you an opportunity to give back to the entrepreneurial community. Here's an opportunity for you to give any advice or inspiration to, say, a younger entrepreneur, or some people like to think of this as, what would I do? What advice would I give to a younger version of myself?
Oh man, start yesterday.
Yeah,
I was just
everybody
about to say
says that. Everybody says that.
I tell them all the time. I got introduced to the concept of syndication in 2011, and at the time, I didn't know what I was being introduced to. But I understood it to be a way to partner with multiple people to take down big deals. And I just got a little sidetracked chasing that shiny object syndrome and going down some paths I shouldn't have gone down. And I personally feel like I missed probably one of the best decades to invest in commercial real estate, just because of the, everybody knows just the wave of appreciation we've seen over the past 10 years. But I go back to just, don't get stuck in analysis paralysis, always be educating yourself again, but just don't get stuck in that rut. Just get out there, take that leap of faith, start taking action. And most importantly, like Brian said, man, just always network. The real magic in this space happens through networking. That's where you're going to find opportunities. That's where you're going to find the best education and resources. So just get out there, put yourself out there, and build out your network.
I agree. I would say the same thing to my younger self or anybody else getting started. It's really about networking. Don't be scared. I would say if you're younger too, you got even less concerns because you got less to lose, right? It's different than when you're, in your 40s or late 30s and you've got a house and a car and a kids and a wife and all this other stuff. Your risk tolerance really drops. So if you're 18, 19, 20, fresh out of college or whatever, now's the time to take some risk, right? So if you're going to go and make some passive investments or some active investments, now's the time to do it. So I would just say, get started, educate, get out there and network, and take action.
I love it, guys. You've given our listeners a lot of great ideas on how to get started, where to go, what to do if you're active, what to do if you're passive. Beautiful interview. I want to thank you guys for coming on the show.
Hey, thanks for having us, George. Really appreciate it. Great
Yeah, George,
conversation.
we really appreciate it. Thanks again.